Yes,
Tesla.
yes. You're still short, correct?
We are short. Yep.
But you trade around that position.
We
correct?
do. It's been bigger and smaller, but we are still short.
You know, you've been covering Tesla for a very, very long time. And there's two ways to think about the valuation of the company. One is as a car company, and one is as a car company plus, or something else entirely. And I'm curious where you land these days.
In this video, which just for the record is actually being recorded in 2023, the debate rages on. Apparently, many so-called experts have still yet to determine whether or not Tesla is just a car company or perhaps a little more. Of course, it's not their fault. There's no data points we could look to or reference to determine whether or not Tesla looks like a typical car company, like operating margins, none of that sort of stuff. So the debate's definitely still raging on, and we don't know the answer yet. But hopefully, after watching this video, hearing from long-term Tesla short seller Jim Chanos and long-term card-carrying member of the fake news Tim Higgins, who's been covering Tesla for quite a while, hopefully, after hearing these expert opinions, we might finally be able to determine whether or not Tesla is in fact just a car company, or maybe just a little bit more. Now, before we begin, I'd just like to direct your attention to some numbers on screen now from Tesla's most recent earnings report. We're looking, of course, at Tesla's operating margin, which for the full year in 2022 stood at 16.8%, and in Q4 2022 at 16%. Now, in isolation, this doesn't tell us a whole lot, but what if we were to look at the operating margin of some other car companies, some other automotive manufacturers, to determine whether or not Tesla is approaching their astonishingly high operating margins, given, of course, that the companies we'll compare Tesla to are currently selling many more vehicles per year than Tesla, meaning they should, in theory, be benefiting from better operating margins because they've reached higher scale, hence the whole economies of scale thing. So, Toyota, currently the world's largest automotive manufacturer by volume, they sell more vehicles per year than any other car company on earth, currently has an operating margin of 7.54%. Now, I'm not very good at math, but I believe that you could double Toyota's current operating margin and you'd still be short of Tesla's operating margin in 2022 and even in Q4 2022, because 7.54 times 2 is less than 16 and less than 16.8. So at approximately 1/5, maybe 1/6 of the current scale of Toyota, in terms of units sold per year, automotive units, because of course we're just comparing car company to car company, right? At a fraction of Toyota's scale, Tesla's already making twice the operating margin. Is this an indication that Tesla may not be just a car company, or is this an indication that Toyota are just absolutely fucking incompetent and don't know how to make money? You guys tell me in the comments below what you think. Now, we're going to zip through a few others, and then we're going to actually look at a little bit more detail about operating margins over time, because this actually really matters. How about the world's second largest automotive manufacturer by unit volumes? That would be Volkswagen, 6.19%. Now again, I'm not very good at math, but I think you could double this, more than double this, not quite triple this, and you'd be about where Tesla was with operating margins. Once again, reminding everybody that Tesla's currently a fraction of the scale of Volkswagen. How about Government Motors? You did it, Mary. 6.83. Once again, you could almost triple GM's operating margin and you'd be about where Tesla's at. For the record, this is based on Q3 2022. And just finally, Ford, a whopping 4.36%, which you could literally triple, in fact almost quadruple, before you reach Tesla's operating margin. Once again, each of the companies we've just looked at is producing significantly more vehicles per year and selling them than Tesla. Yet, at best, they're making half the money, maybe a third of the money that Tesla is in terms of operating margin, at much larger scales, having been in business for multiple decades. Of course, this doesn't tell us a whole lot. Let's look at the trend. Maybe their margins have just halved or crashed by 2/3 in the last couple of years, so let's look over the longer term. First with Toyota, operating margin here along the bottom. Okay, they obviously had a tough time coming out of the global financial crisis. Didn't everyone? Margins have then climbed up to around the 10% level before coming back down to 6, 7, 8%, then eventually rebounding a little bit towards the 10% mark and now declining towards 7%. Call me crazy, but I don't think it's reasonable to expect that, say, Toyota's operating margin would actually increase over time, given the fact that it's essentially gone nowhere since coming out of the global financial crisis, hovering around that, let's call it 7, 8, 9, 10% range. How about Volkswagen? This paints a rather disturbing picture, doesn't it? Must have been Dieselgate in there. So Volkswagen, peak operating margins, not even 9% throughout this decade, hovering around the 6.5% mark, collapsing again in 2020, and then rebounding a little bit to the high 7s, mid 8% range. So again, in terms of the trend, it seems like operating margins are going to be fairly stagnant for Volkswagen. This is assuming they don't have to invest a ton of money transitioning to EVs. Let's not go there. How about Government Motors? You did it, Mary. Whoa, what the fuck? I don't even know what that was. What a fucking business GM is. Look at those operating margins in the 2010s. mid 3%, minus 20% for a little while, and then back into the almost 1% range. Look at that. GM operating margins in 2014, 0.25%, 0.9%, 0.98%, surging to 1.83%, and basically going absolutely fucking nowhere for an entire decade, currently floating around the 6 or so % range. And lastly, Ford. Ooh, now that does not paint a pretty picture. What the actual fuck is happening Ford? Oh boy, this is not trending in the right direction overall. Operating margins are just one extremely important data point. And before we hear the comments from long-term short seller Jim Chanos, I just wanted to put this card on the table as a single data point to consider. If Tesla's just a car company, you'd probably expect that their margins would be worse than these car companies who are at much larger scale. And in the best case scenario, if we're being really generous, surely they wouldn't be any better than these companies, right? After all, Tesla doesn't know what the they're doing. They're still learning. They're still scaling up. Nowhere near the scale of any of these companies yet. You'd hope over the long term, as they do reach scale, their margins would grow. So on screen now, we happen to be looking at trailing 12-month operating margins for Tesla, the automotive industry, and the S&P 500. Tesla in red, autos industry in grey. Now, I may be dumb, I may be a deluded Elon D rider, but the way that I interpret this data is accurately, and the accurate way to interpret this data is that Tesla has increased their operating margin significantly over the last couple of years as they've scaled up their production. From a negative value in 2019 to on par with the automotive industry average, to then far exceeding the automotive industry average, and it appears to be painting a fairly clear trend up. Now, I know this has been a long spiel, but it's super important to get this out of the way before we hear from Jim Chanos, because if we're determining whether or not Tesla is actually just a car company, possibly the single most important metric in terms of judging this statement is their operating margin. Because as we know, the automotive industry is the automotive industry. We all understand how it works. We all know what the operating margin should be. We all know how you sell vehicles. We all know everything because it's an established industry. Oh, I almost forgot. You have joined Patreon, haven't you? Oh, you have? Okay, good. I was going to tell you about the 280 plus exclusive videos, the price targets, and all the fire content I'm dropping and continue to drop in the future. But since you've already joined, you're not missing out on any content. So let's move on. Over to everybody's favorite, Dim Kramer. Oh, wait, no. Dim Chanos. Wait, no, I think I'm saying that wrong. Anyway, this guy that's still short Tesla stock in 2023.
Yes,
Tesla.
yes. You're still short, correct?
We are short. Yep.
But you trade around that position.
We
correct?
do. It's been bigger and smaller, but we are still short.
What is the thesis now?
So what I would point out is what I mentioned today on social media, which is it's interesting is what the bull case has done. The bear case has been pretty consistent. That competition was coming in, margins would have to come in, sales would slow from the torrid pace. What I'm more amused by is how the bulls have effortlessly shifted from, in October, this is the only company still growing 40 or 50%. And you can pay 60 times earnings. $4 last year. In October, the stock was $240. Now that earnings estimates have come in hard for 2023, up 10%, $4.40 versus $4. Now the narrative seems to be, well, yeah, there's a price war going on, but the legacy auto guys are going to be hurt a lot more than Tesla is. Okay. But that just shows you that the auto business is a tough business, right? If you've got to cut price as well as raise price for ebbing supply and demand, you're in the auto business. You're in a cyclical business.
A common trap many very intelligent people, like Jim Chanos, make is to go, oh, I have seen that before. I know what that is. Yeah, that's one of them. I don't need to think about that anymore. I have a gold-plated excuse to stop thinking because I've seen enough, I know enough, and that is exactly what I think it is, the fucking end. And you find any indicators that suggest maybe it's not what you think it is, just ignore them. According to Jim's logic here, if Tesla dynamically adjusts pricing, they must be an automotive company. Now, don't get me wrong, there is an automotive element to Tesla, but that is just the tip of the iceberg. If Jim is going to apply logic universally when gauging Tesla and going, oh, well, look, they cut prices, automotive companies cut prices, they must be an automotive company, surely he then also needs to look at some other data points to make sure that they also align. Oh, look, Tesla cut prices like a car company. Tesla's operating margins like a car company. Oh, wait, they don't. Tesla advertises like a car company. Oh, wait, they don't. Tesla has these vehicles autonomously driving people around that are absolutely fucking next level AI. Every other car company has those too, right? Oh, wait, no, they don't. Interesting. But Tesla definitely manufactures vehicles like every other car company. don't they? I mean, ask Sandy Munro. It's not like he cracked a massive fat the first time he saw the gigacasting and nutted everywhere when he saw the octovalve heat pump and said, holy shit, this is amazing. Why didn't anyone else do that? Oh, wait, no, that's actually what happened. Minus the nutting. I don't know if that actually happened. I presume it probably did, but they never filmed sort of the bottom half. Anyway, I think what I'm trying to say is Jim has a little box that all car companies fit inside in his head. The only relevant parameters: if the company produces products that have wheels, tires, windows, and doors, it's a car company, the end. It seems to me that Jim Chanos is suffering from severe confirmation bias that blinds him to any indicators that he may not in fact be on the money when it comes to thinking Tesla is just a car company. Please, name a single other car company that has invented a new form factor for battery cells that the entire battery industry has adopted. I'm just kidding, don't bother, because no one has. But Tesla did, 2020. You did hear GM is now abandoning their pouch cells and they're copying Tesla's 4680 form factor as well, right? You did hear that, right? Because that did happen. Of course, it's not like Tesla had over-the-air updates for more than a decade before a single other company figured out how to do the same thing, and in fact, most of them still haven't, right? Because that might be another indicator that Tesla's not just a car company. If they'd been doing something with software over-the-air updates that no other car company could do and took more than a decade to finally start figuring out how to do. And it's not like VW's Herbert Diess, well, ex-VW's Herbert Diess, publicly said that Tesla was leading the way, and in fact, they were producing cars in literally 1/3 the time it took Volkswagen to produce them, because that might indicate they're not just a car company either, because surely Volkswagen have been in business since they were founded by the, let's not talk about the founders. Surely a company that's been in business for longer than most people watching this channel have been alive. Surely such a company would have probably optimized and engineered and been able to produce vehicles a lot more efficiently than a Silicon Valley startup that's maybe 2 decades old at best, right? Because if that's not the case, if this company was producing the same product, at least according to Jim, in 1/3 the time, and one of their competitors in the automotive industry was pointing and going, hey, they're doing this better than us, much better, so much better that we're going to try and copy them. They're leading, we're trying to catch up. That too might be an indicator that maybe there's something a little bit different about this company. But that didn't happen, so whatever. And I mean, it's not like Jim Farley, CEO Ford, is talking about Tesla leading and learning and trying to catch up to them and engaging on Twitter in the debate. Look, that wouldn't happen either, but it did.
And his margins, which peaked out in the high 20s, gross margins, are now heading, we think, into the high teens, where they were before they opened China. Everybody forgets Tesla lost money through 2019 building cars in the United States. It wasn't until they opened Shanghai and that ramped in a major way that their margins took off. And China right now is their weakest market. So he's, they're wrestling with some issues. And the stock is still at almost $550 billion market cap, is trading now at 20 sometimes gross profits. It trades at a premium. I looked before I got here. It actually trades at a premium in terms of its multiples to Ferrari and Porsche.
That's an interesting point, Jim. Let's think, I know it might hurt, but let's think outside our little box of what a car company is and just think a little bit about why this might be. Why would Tesla potentially have a higher multiple than a fairly profitable automotive company that's not growing at all? Like, I don't know, Porsche or Ferrari. Could it be possible that this just a car company is growing revenues around 50% per annum? Could that be why they might have a slightly higher multiple than a company that's not growing at all? No, what a silly question, as if that would happen. That doesn't explain anything. They're still a car company, but all these anomalous things that indicate they're not a car company, we'll just ignore them and just say that it doesn't make sense. Not that, maybe it does make sense if they're not just a car company. I feel so bad for this guy. I mean, he's trying his best. He really is. He just doesn't get it. He's got a box in his head. That's a car company because it makes things that have wheels on them. They end. I'll ignore every data point that doesn't go with my narrative, and I'll just look at the ones that do.
Wow. But does it tell you something, I don't know, about the mentality of the Tesla stockholder, that the earnings have been reported, that it is known now that their margins are going to decline by a lot, and the stock still went higher on the back of the earnings. And by the way, Ford has said that we have to cut the price of the Mach-E because of Tesla, that the competition is getting to the point where they have to follow what Tesla is doing. I mean, isn't this a case of Tesla trying to just gain share? And so in the long run, they're better off because they'll have the volume and their margins will be better.
Melissa, can I introduce you to some other stocks in my portfolio in the last 3 weeks that are up more than Tesla, that are going bankrupt? I mean, it's been an insane 3 or 4 weeks, much like July, August. And so you've had stocks like Carvana triple. You've had Beyond Meat, which we think runs out of money this year, up 40%, 50%. I mean, Tesla's not alone.
So, Jim, let's talk about Tesla in China, okay? Because we know that they have this great market share here in the U.S., and I think Melissa just mentioned that Mustang Mach-E price cut. They're making those cars in Detroit here, okay? But the cars that Tesla are making in China, they have less than 10% market share over there. And a lot of these local manufacturers are obviously doing much better, and I see no reason for that to change. Throw in what we just talked about, this geopolitical potential. Our situation with China is not getting any better, but yet he's placing more and more emphasis on that market from a manufacturing standpoint.
Okay, so did you catch that? Dan just said that Elon, Tesla, they're putting more emphasis. By the way, you notice he's talking about he, as in Elon, not Tesla. Why do people do this? Oh, that's right, self-hatred. Tesla equals Elon. Elon equals bad, therefore Tesla equals bad. But let's not go there. He just suggested that he, as in Tesla, as in Elon, Tesla, same thing, right? They're putting more emphasis on China, more emphasis in manufacturing in China. I just heard that. Now, if that was true, you probably wouldn't find in Tesla's most recent earnings report and or on the Q4 earnings call them saying that the Shanghai capacity is going to be relatively flat throughout the year, but they're simultaneously building 2 new fucking gigantic factories on 2 entirely independent continents, as in not in China. Because if they were emphasizing China more, that would probably suggest build more factories in China and not build factories in not China, such as in Berlin and Austin. Wouldn't that follow? That makes sense, right? I'm not being hard on this guy. I mean, in fairness, he is actually the dumbest motherfucker in the finance media, hands down, no contest, the end. But on this particular point, I think I'm being fair and reasonable, right?
From access to rare earth materials for their batteries, and then also the demand for the cars. It just seems like pretty obvious to me that this only gets worse before it gets better in China for them.
Well, Dan, I mean, I've been saying kind of half tongue-in-cheek that Tesla is a Chinese car company, and it really is. The bulk of its production is there, and we think almost all its profits are generated there. And so you have all kinds of risks now, in light of our earlier discussion about the warnings. But on top of that, you have repatriation of capital risk. You have BYD and others just taking massive market share. And Tesla trades at a premium to those companies who are growing faster than they are in China. So if you want to play all these things, there are now lots of ways to do it. If you want to play the growth of EVs in China, you can buy BYD, you can buy NIO, you can buy Li.
Do you own BYD?
No. We own the S&P and the NASDAQ. I don't think it's in the NASDAQ. So if it's in the NASDAQ, we own it. But I just think that it's really, the choices now are increasing, and the bears were wrong on competition. It took a long time to show up.
So credit to Jim where it's due. He has finally recognized that the bears were wrong because, well, let's say the last 15 years, the competition is coming, never happened. And Jim, the competition is still yet to come, except prematurely, embarrassingly fast, and all over itself. Shitty, unprofitable EVs do not count as competition. You can't compete if you can't stay in business and or if no one's buying your goddamn products. If you're not making money on your products and no one's buying them, it's a problem. Just because there is a vehicle that is powered by a battery that a consumer can purchase does not mean is competing with Tesla. This would be like a f***ing 3 out of 10 guy who's 37 years old, still living at home in his mum's basement, has never been employed his entire life, thinking he is competing with a multi-billionaire top 0.1% guy, Jack Smart, funny, handsome, charismatic, you name it, he's got it. And to think that he is competing with that. No, sir. There is no contest here. You've already lost.
But I don't think they're wrong now. I think the competition is growing and it's here.
Let's play the trade around it game. Traded down to 101 and change, rallied 75% or so since. Carter Worth last week said the stock is going to trade up to 175, middle of that downtrend, and fail. It's sort of doing that today. You're trading around it. Where's the ultimate level for this thing to get to a point where you say, you know what, that's it, I've got enough, this is my level?
Well, I mean, so again, the street estimates have come down dramatically. So street estimates for this year were $6. They're now 4 and change. We think the number has a 2 in front of it this year. And so then the question will be, will investors say, gee, this is cyclical? I mean, earnings were cut in half. And what kind of multiple? I think it'll always trade at a premium over the intermediate term to other OEMs. But I don't think it should trade at 5x premium to the other OEMs. And that's where it is. I mean, again, the other OEMs trade at 3 to 5 times gross profits. Tesla's trading at over 20 times gross profits.
I harbor a suspicion that Jim may not be thinking clearly. I'm just kidding, I know he's not, but I'm trying to be nice here. It seems as though Jim is under the assumption that these legacy automotive manufacturers will still be in business in the future. They won't. There's no risk to investing in these companies. There is. and that it doesn't make sense for Tesla to have a massive premium over companies who will soon be extinct as a direct result of Tesla's existence and eating their lunch. Maybe the guy's in poor health, maybe he's not sleeping well, I don't know, something's not right. Like, he's a smart dude, so what's the issue?
And so the magnitude of the valuation discrepancy is enormous here. And I think that's, at some point, that's going to close dramatically. Now, is it $40, $60? I mean, I don't know. We'll have to see. But I don't think it's 170.
Wow. Jim Chanos not exactly sure where Tesla will ultimately trade, but he did throw out somewhere in the $40 to $60 range.
Is there anything that you think maybe I don't get this part of the Tesla story, or this is the one wild card that could happen that would cause me to rethink my short? I mean, you've been a directional short for a long time. The position size changes over time, but is there something that sort of gnaws at you?
Yeah. I mean, something gnawed at me for better part of 4 or 5 years. The stock was flat for 5 years and then took off.
Why didn't you cut your short then?
We did. Yeah.
Were you completely out of that short at the time?
I don't think we've ever been completely out, but we vary positions from 0.5% to 5%. 5% is our limit, and things rarely get over 4 for us.
Where are you
so
now?
when people talk to us about a Tesla, whatever, they always mistakenly assume it's our only position. Right? And there's one of 43 names in our portfolio. So I mean, we have a few other ideas. Right now, it's kind of in the middle of that range. But I debated a noted Tesla bull a week and a half ago. And I stand by what I said. I think if Tesla were to show re-acceleration of earnings, I think we would rethink our position.
Fair warning, folks. You may suffer from secondhand embarrassment watching this, but we did just hear that Jim Chanos claimed that if he were to see an acceleration in Tesla earnings, he may finally change from his currently long-standing bearish stance on the company. So, over to you, James Stevenson, aka Elon's favorite Tesla analyst. No, really. Like I said, this is not going to be easy to watch, but we're going to watch it because, let's just on screen now. This is effectively Tesla earnings, cumulative net income since IPO, and we're looking for an acceleration here. I don't really see, oh, that's bad. Oh, they're going bankrupt. Look, they're going bankrupt. It's going, oh, shit, they're going bankrupt. It's over. Short Tesla. They're going bankrupt. Elon's a fraud. The company's losing money. They're going back. What the fuck? Was it just me, or did we just see a massive acceleration in earnings? I just got to make sure I could be high or something, so I just want to make sure that was an acceleration. And Jim. Hey, Jim. Hello, Jim. Can you hear me? Hello, Jim. Can someone send this to Jim? No, like seriously, Jim. I mean, dude, what is there to say? The facts don't lie. This is data, not an opinion. The very data that Jim is suggesting would have changed his bearish thesis on Tesla. I'm not trying to play a trick here, okay? This is cumulative net income. It's not identical to earnings because it's cumulative, but I mean, again, if that goes like that, you kind of might go, oh, shit, I might have been wrong about this company. Fuck, I've never seen that in the automotive company. Maybe they're not just a car company after all. This really hurts to look at least if you think Tesla's just a car company.
Like, suddenly 450 became 5 and 6 and 7 again. I think their profits are going to be under pressure, and I think it's going to be relatively permanent. I don't think they're going to be earning 28, 30% gross margins. I think it's too competitive market at this point. They're too big. They've been successful, right, but law of large numbers. And now they're having to go down market to get more share and more volume, and that puts them right square in, with the Japanese, German, and U.S. auto manufacturers.
Right.
Japanese, German, and US automakers. Japanese, Toyota. German, Volkswagen. US, Ford and GM. But didn't we just look at earlier in the video the whole operating income of companies in those exact fucking regions that he just named? He's just saying that that's where Tesla's going, or is, or going to be. Man, I just feel bad, Jim. Something's wrong. Maybe he's got like mercury poisoning. He's been eating too much swordfish or something in his salads. Seriously, he can't be he's not that dumb. He's a smart dude, I thought. Wait. I think I've got it. Jim. I've got it. A suggestion. I'm trying to help. I really am here. Okay, ready? Jim, I think you need one of these. In fact, everyone watching needs one of these. You guys have seen me wearing this for like the last 18, 19 plus months, right? Haven't you? Fancy that. This is an Oura ring. I use this to track my sleep and many other health markers as well. And as the saying goes, what gets measured gets managed. I've massively improved the quality of my sleep my energy, my health, and well-being as a result of tracking this data. I think Jim isn't sleeping well, he isn't eating well, something's wrong with his health. So maybe, Jim, a general suggestion, get yourself an Oura ring with the link in the pinned comment, auraring.com/SMR. By the way, guys, I'm super serious. I think something's wrong with Jim, probably a red flag in terms of health somewhere there. And yes, I really have been tracking my own sleep meticulously with Oura Ring for more than the last 18 months. In fact, allow me to show you what I've done to my own personal health and well-being as a result of tracking. This is my resting heart rate since August 2021. Notice the trend? It's going in the right direction. How? Because I look at it and go, that's f***ed. Let me try to improve this. Supplementation, diet, exercise, everything, right? You guys know I'm a biohacker. The 3 pillars of health and well-being: good sleep, good nutrition, and exercise. How about another marker that I've been tracking the entire time? My sleep efficiency. On screen now. A truly horrific 74% when I began tracking. Yeah, that's right. 26% of the time I was in bed at night and or in the morning, I was awake, not asleep. That came as a shock. The trend has massively improved. It's now hovering around the 90% mark. You guys can see my average sleep per night over the last 31 days, just under 8 hours, and average sleep score over the last 31 days, 85. Since everyone watching, or almost everyone watching, owns Tesla stock, you'll understand the importance of looking at a company's financial results and some overall trends in the industry to understand the health of the company. Well, guess what? The analogy applies to yourself as well. Most of you understand it's important to understand how much money is Tesla making, how many vehicles are they selling, what's the EV adoption rate globally. But how many of you are paying equally close attention to your own health and your own biomarkers? Your sleep, your readiness, your resting heart rate, your heart rate variability, and so on. Probably not enough of you. I'm not mucking around, guys. You guys have seen my own results. Can't make that shit up. And by the way, talk about some credibility. The reason you'll have seen me wearing the Oura Ring in literally every single video I've recorded over the last 18 plus months, going back to August 2021, is because I've been wearing it every day and night, because that's how long I've been using and loving this product. And I am serious. I think something's wrong with Jim's health. I don't think he's thinking clearly, and I think he needs to get checked out. Maybe some blood work would help as well. So I think what I'm trying to say is, unless you want to be Jim, I'd probably recommend getting your own Oura Ring with the link in the pinned comment, or Oura Ring, that's OURA ring.com/SMR. Grab yours now and thank me later.
You know, you've been covering Tesla for a very, very long time, and there's 2 ways to think about the valuation of the company. One is as a car company, and one is as a car company plus, or something else entirely. And I'm curious where you land these days.
You're right. I think the market would like to value it as a tech company, betting on the idea that it's going to be more than just a car. It's going to be an autonomous robot taxi service. It's going to be an energy company. And the market's really been struggling in the last few weeks, as you've seen kind of the realities of moving metal in the storerooms. It's messy and it can be kind of expensive. And so I think in the last few weeks, you've seen some of that kind of excitement return to the idea that it's a tech company, but it's still a long road for the rest of the year. Heading into a potential recession could really test that thesis, I believe.
And where do you land when it comes to the pricing issue? I mean, the good news was they lowered prices, seems to be moving vehicles.
Mind blown. I mean, whew, geez, I would never have imagined that if your product was compelling and you reduced the price, more people could afford it and more people would buy it. If only someone had written a master plan years ago explaining that if you lowered the price of your vehicles, more people could afford it, and that's what you're going to do, and then you'd do it.
The question is, at some point, from a pricing perspective, can everybody else do that? Maybe they can't do that.
Well, in a lot of ways, it's a classic automotive sector move. The issue here is that Tesla has so much margin that it can afford to do this. And investors traditionally here have been willing to see margins decrease, that pressure, and with the kind of seeing the growth in sales, they'd rather see market share gains or keeping that market share strong because Tesla is a growth story. Now, other automakers don't necessarily have that ability, and they're really in a bind as they try to come to this new technology into the marketplace. And they've been betting that the pricing would be what it was going to be, and now they're facing new pressures from Tesla.
Tim has accurately described reality. Tesla has forced the hand of most of the automotive industry to cut prices on their unprofitable vehicles just to compete with Tesla's highly profitable vehicles. Yet another indicator that Jim Chanos' thesis around Tesla just being a car company doesn't really add up, because if it did, then Tesla wouldn't have a huge pricing advantage over other automotive manufacturers, enabling them to cut prices on vehicles and still make industry-leading profit margins, while other companies attempting to compete would have to cut prices on vehicles they're not making any money on already and lose even more money just to try and stay in the game competing with Tesla on price. Jim, I'm not kidding, man.
I don't know if we can put a screen back up of the EV makers, because what we do, it's a very interesting thing. We show Tesla and we show it up against Rivian, Lordstown Motors, NIO, and Lucid Group. We don't show it against Ford or General Motors or the like. I don't know if that's you think the right way to look at this or the wrong way to look at it. I was curious how you're thinking these days about a Rivian, how you're thinking about these days about a Lucid, for example.
Yeah, I kind of think of them in the same ways that I thought about Tesla 2008, 2009. It's a real critical period. Cash is going to be king for these smaller players. Can they get through a downward cycle?
That, Tim, is a great question to which the answer is a little unclear. I wish these companies the best, but wishing and hoping isn't going to affect the actual outcome.
That's going to be the big gamble. People who look at the product that Rivian is doing have a lot of praise for it. They have a lot of praise for what Lucid is doing. The bigger question is, can they make it as a real car company? And if you look at Tesla as an example, that can be a very painful process from going from the rather cool idea of a car, cool product, to making a car at scale. Just ask Elon Musk and his sleeping on the factory floor for all those years. It's messy.
Tim seems to get it. Jim seems to not get it. Jim, of course, is the genius investor, and Tim's just some journalist, which is more of an indictment on Jim than Tim. I mean, honestly, guys, in 2023, I cannot believe that there's still people shorting Tesla. I mean, Jim Chanos has essentially, he said in this interview, he's basically been short Tesla the entire time, betting against the company non-stop for years, the better part of a decade. His thesis: they're just a car company. The competition's going to come. Their margins are suddenly going to collapse from industry leading to in line with the industry had, but for some strange reason. And we also heard Jim point out a data point that would immediately change his mind: an acceleration in earnings. And then we looked at some data suggesting that Tesla has massively accelerated their earnings. But Jim's still short and still claiming that they're just an automotive company. And again, to bring things full circle, it appears that Jim isn't and hasn't been thinking clearly now for the better part of a decade. I'm here to tell you, Jim, you do not understand Tesla. Their earnings are accelerating, and you are making a major mistake. And guys, I seriously implore you, grab an Oura ring, use the link in the description, start tracking your sleep and your other biomarkers, see your health, your recovery, your readiness, understand your body, and you can start making adjustments and improving your health and well-being. Otherwise, there's definitely a possibility you may do something really f***ing dumb, like short Tesla stock consistently for the better part of a decade and still think they're an automotive company. As I said, what gets measured gets managed. You saw my own results. Massive improvement in sleep efficiency, massive reduction in resting heart rate. All my markers are going in the right direction, and it's not an accident. So pick up your Oura ring at auraring.com/SMR or use the link in the pinned comment. And lastly, if you want more content, including a lot of stuff relating to biohacking, my biomarkers, health, energy, longevity, the whole kit and caboodle, I discuss a lot of this stuff over on Patreon. So if you're not already a member, you can join Patreon with the card in the corner or the link at the pinned comment, and I'll see you over there. Love ya.